4,212. Nothing is holding this price, and it has not moved in 20 seconds. Buyers are hitting it. Every green line is another trade going through. And the number does not change. The obvious explanation is that somebody big is standing in the way. Nobody is. Price only moves when a buyer runs out of sellers at that exact level, and the sellers keep coming back. Someone is refilling the queue behind it. And you can't see him because you're watching the wrong half of the order book. Last time, we built liquidity from zero. This is the next mystery on that list, the wall that won't break. The answer itself is quick. The useful part is the sorting. 4 things make a price stand still, and they look identical. So you'll look at a price that refuses to move and know which one it is: real, hidden, fake, or simply empty, and the right question to ask of each. And for 2 of them, one thing on screen separates them. Not a law, a convention, but the cleanest line there is. So who decides price is allowed to change? The matching engine. Price is not an object that moves. Price is a record, the last level where a trade actually happened. So the question is never what pushed it. It's, did anything trade somewhere else yet? The CME, the exchange these futures trade on, splits every match into 2 roles. The aggressor arrives and takes. The resting orders sit and wait. Takers move. Waiters get taken. And everyone waiting at that level is not a blob. It's a line. On the futures products that use time priority, earliest in gets filled first. A price level is a queue, and a market order eats it from the front. 200 contracts waiting. Someone buys 50. The front disappears. 150 still standing. And the price has not moved one tick, the smallest step the price is allowed to take. The level dies when it empties, not when it's frightened. The move happens on the very last contract. Not the big one. The last one. So who keeps putting the last one back? So the definition, less mystical than the word sounds. Absorption is not a force. Absorption is a refill rate. The queue is draining, and somebody is topping it back up faster than it empties. Nobody is pushing back. Somebody is just restocking the shelf. And the maths agrees. Researchers modeling the order book found the price move per unit of buying pressure is inversely proportional to how many contracts are waiting. Same pressure, bigger queue, smaller move. Absorption is a division problem. But why would anyone volunteer to stand in front of a stampede? Because absorbing is the profitable side of the trade. 2 prices are always on screen, the best you can buy at, and the slightly lower one you can sell at. That gap is the spread. The aggressive buyer pays it and gets filled at the seller's price. The absorber pays nothing and gets filled at his own. He chose the number. You accepted it. It's a business, getting size done without paying to be in a hurry. So would you show anyone the size of it? Of course not. This is the half of the book you cannot see, and it has been measured. 100 stocks on the Paris Exchange, 2003. On average, 44% of order volume was hidden. And what is displayed is only ever a thin slice of a day. The book at any instant holds a fraction of what trades before the close. The 44% is the concealment. So when you stare at a wall, you're staring at the part of the book designed to be looked at. So what is one of these hidden orders? Not folklore rulebook. Zetra defines an iceberg as 3 things: a limit price, a total volume, a peak. Only the peak is visible. It trades out, a new one appears, and that new peak can be randomized, so you cannot count the refills. And the rulebook says it flatly: icebergs will not be marked as such. A marked iceberg is a free signal to trade against. CME doesn't even use the word. They call it a display quantity order. NASDAQ and NYSE ARCA call it a reserve order. 4 rulebooks, 2 countries, the same trade-off in each. You may hide and it costs you. Read the refill. And hiding is not free. Read what the rulebooks say about the refill. Xetra, the new peak enters with a new timestamp. CME, the quantity is reinstated at the bottom of the book. When your visible piece gets eaten, your replacement goes to the back of the queue. The price of invisibility is your place in line. You get to be big without being seen. You pay for it in time, every refill. And that hands you the first of your 4 questions, the one that tells a real wall from a hidden one. Watch the number after it gets eaten. A real wall shrinks, the size comes down and stays down. A hidden one keeps reappearing at the same price, every replacement starting at the back. Shrinks or reappears. That is the whole test. So how big is the hidden part? On Xetra in 2004, the average iceberg was 7.6 times its visible peak. And roughly 80% of the shares, those icebergs executed, came from volume you never saw. The wall you were sizing up was the tip. And everything I've just described is legal. Exchange bill, exchange documented. Because some walls were never going to be filled. The law does not care how big your order is. It cares whether you placed it intending to cancel before anyone could trade against it. That's spoofing, written into US law in 2010. And it is enforced. The CFTC ordered JP Morgan to pay over $920 million, and trader Michael Cassia went to prison for 36 months. Not a fine. Prison. So the line is real, and it leaves a mark on the tape. You can't subpoena intent. So here's the discriminator you can use. Researchers went through 204 spoofing enforcement actions. The charged orders had a fill rate, the share that actually traded, under 1%. Genuine orders, above 35%. So stop asking how big the wall is. Ask whether anything is trading against it. No platform prints a fill rate for you. You watch 2 things already on your screen, the tape and the size column. Are prints landing on that level? Absorption bleeds, the size is being eaten and put back. A fake wall is pristine, huge size, and the tape never prints there. Careful, that pattern was found after the fact, in charged orders, and plenty of honest orders never get filled. A question, not a verdict. It's not the size. It's the scars. Now the 4th case, the one that costs beginners the most. Same price sitting still. Except this time, nobody is there at all. The buyers didn't hit a wall. They just stopped. So how do you tell a level someone is defending from a level nobody wants? Exactly one thing separates them, and it isn't the latter. It's the volume at the stalled price. Absorption is a lot of volume and no movement. Exhaustion is barely any volume and no movement. Same stillness, opposite cause. A queue being fed or an empty room. That's practitioner convention, not a measured law, but it's the cleanest line there is. Which leaves the last question, why does the level break? Because a reserve is finite. When the last slice of that hidden order is gone, the defender isn't defending. He's gone. And behind him, nothing. One stock, the London Exchange, 22 trading days, 2002. After a large trade, the book failed to replenish in more than 60% of cases. In that market, the depth eaten mostly never came back. So the move after a broken level isn't a motion. It's an order falling through a floor that was already gone. Now the part every other video leaves out. First, Absorption does not predict a reversal. No research links a level holding to what price does next. It held. That is all it tells you. Second, a huge order producing a small move is the norm, not proof of a defender. 4 times the size moves price about twice as far, not 4 times. That has a name. Impact grows with the square root of size. Most of the absorption a beginner thinks he's spotting is that square root, doing its boring job. Third, the uncomfortable one. You cannot see most of it. The best detector in the research still missed 1/3 of all iceberg states. Fourth, hiding costs the hider too, worse fill odds, slower execution. And now the conclusion, not the shrug you cannot judge by eye whether a stall is bigger than that square root already explains. Which is exactly why the size of the stall was never the signal. What you can see is behavior. Does the size shrink and stay down or reappear, and is the tape printing there at all? Those two survive everything I just took away. 4,212. Buyers hitting it, the tape green, the number frozen. You can read that now. Nothing is standing there. Something is being restocked. A queue is being eaten and refilled faster than it empties by someone showing a fraction of what he's got, paying for that privacy at the back of the line. Real, hidden, fake, or empty, and you know what to ask of each. Is anything filling against that size at all? Is the tape printing there? A wall nothing trades against was never a wall. And if there's no size there either, nobody is defending anything. That's an empty room, not a fight. What next? 0-1, pulled liquidity, the level that vanishes without a single trade. Or 0-2, delta, the number that lies. 1 or 2 in the comments, or name your own. Most comments wins. See you on the ladder.